Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So Bitcoin on the 4-hour, we find ourselves yet again at the upper side of this sort of range we've been in for a while. Obviously, we had a little break above yesterday, day before. We got slammed all the way back down to the lower side of our range that we've got going on, and we're back up trying to test it. So obviously not the worst thing that we have not capitulated lower. The fact that we are still flirting with this $20,000 Bitcoin level is significant. Really, it does show that there is some sort of a bid coming in here. That is on a volatility adjusted basis. We're not getting hit as hard as some of Finance 1.0 markets. So yeah, speaking of those markets, let's go to the S&P. S&P did manage to get itself above this resistance. However, sold off from that level, and now it's testing the lower side of this range. So if it can hold from here, not come back down to this low, come back up, take out this high and continue upwards, we can have another attempt of a rally to the upside. But what I think is will be the most telling chart is this DXY chart. We did have a decent pullback here, and then a little bounce, and now we have a bit of an indecision candle. So I think realistically, if we basically draw pretty much the upside of this candle, here, and then obviously the lower side of this low down here, and if we are basically to take out this low, come back down, take out this low, then yeah, I think we will see a decent amount of downside, and I guess obviously the first level of real support in that scenario would probably be it'll probably be around, well, it'll be around this area. It'll be somewhere in here basically, and then obviously if we can bounce from there and then continue onwards and upwards, or if we do manage to get back down through this, then yeah, we'd move this down a little bit. If we do manage to get back down through this, then yeah, I think we could potentially have a decent medium-term pullback. Obviously, we've got the central bank over here in the UK has obviously blinked, resumed the money printing, and I think everyone, now that they've seen a major central bank of the world do that, they can kind of extrapolate that to other major central banks, and then I mean, we can see that we're probably going to go into a QE period again, and that is obviously good for risk assets. It's obviously what has given us that bit of that bump up in risk assets, and obviously draw down ever so slightly in this 10-year, in this DXY, and then also in the 10-year, as you can see. What else we look at? Yeah, we look at that pound. That pound is now looking like it was selling the rumor by the fact, forced the central bank to play its hand, and then now we could have put in a low here. Obviously, don't forget, currencies are relative trades. This is against the US dollar. The Bank of England has now obviously capitulated and gone back to QE. So obviously the American dollar hasn't. So now now obviously this could have obviously reached its lowest point, as then we have to sort of factor in the maybe potentially increasing probabilities of the US dollar being basically doing what the Bank of England has already done, and in which case that would cause this a significant sell-off in the dollar, especially the DXY, because that would be its price against the relative to other currencies. That wouldn't necessarily cause a significant sell-off in the dollar versus real things, i.e. Inflation then will probably get stoked higher, or could potentially get stoked higher in that scenario. But obviously currencies against other currencies, clearly a relative trade, so the dollar could obviously weaken against other currencies, yet inflation could still run rampant, and then obviously we could still get a rally in risk assets, as risk assets are also generally a hedge against inflation. They're just not a hedge against the central banks just rugging us of liquidity, which is what's been going on. What else do we look at? Oil back above 80. I guess the US was buying and filling its reserves, but obviously as we know, we've got we've got heightened geopolitical tensions again, or even further heightened geopolitical tensions. A similar little bounce in gold, which does kind of speak also to that, one, to that heightened geopolitical tensions, but also just the central bank policy change in the UK. What else do we want to look at on here? Ethereum Satoshi parent not doing a lot, just holding above this support area. The USD parent similar, not doing a lot, holding above this support area. So let's go and have a look. Finally, let's look at those stochastics. Before I looking to turn back over here and reject getting into the bullish half. 10 hour turning up, 12 hour looking like it wants to turn down here. Daily though, still looking good, lots of room to run. 2-day, obviously, if we hold up here, or especially move above 20k, 2-day could start to give us some upside momentum as well. 3-day turning up from a low level, 5-day turning up from a low level, weekly turning up from a low level also, bi-weekly down and monthly still down. But yeah, I mean, it's pretty much as simple as if that DXY is going to continue to the downside, or if it is just going to resume its upside, then obviously the markets will trade accordingly. So yeah, that is pretty much it for today. Thank you for listening. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.